Welcome to the Microfinance podcast. Listen to inspiring interviews and take a look at tools and products that are used in the field. This podcast is produced by MicroSave, market-led solutions for financial services, and is brought to you by Moving Planet Films.
Looking into the future, perhaps take a 5-year time horizon. That's as far as I can go at this point in time. The potential seems very large. The key question is, who is going to take it there? Because if we can find the party that is really going to drive this, then we can match the potential that we see intellectually with the vehicle that is going to take us there. And I think there, very clearly, the answer is going to be the mobile operators. So I think mobile operators are going to embrace it. That's not to say necessarily they're going to be trying to do it exclusively under an M-Pesa model where they are actually the bank. They may be doing it with banks as well. But there's very clear reasons why mobile operators are in a very strong position to drive it. First, they control the technology. I mean, for them, it's very easy to manage the security aspect of the mobile phone, the downloading of the user interface, the client application into mobile phones. That's their business. Second, they have the network of retail outlets that they already deal with, that they can entice into offering cash in, cash out services. And third, and probably most important, they have this business model of you make a call, I charge you a little bit. You send an SMS, I charge you a little bit. This transactional model that I think is going to be essential to make this happen. If we're talking at services for the poorest people, or poor and poorest people, we're not talking about a huge amount of money in terms of savings that will be mobilized. It's going to be hugely impactful for them, but on aggregate, it's not a lot of money. So the biggest mindshare that needs to happen is from float-based revenue model to transactional revenue models. Mobile operators are there. Mobile operators can be picking into customers' pockets a few cents at a time and taking a clip of a small percent of that and make money. Because not only do they have the right mindset for it, but they also have the right platforms where you never lose money from a customer. Mobile operators sell to everyone. They don't make such a distinction as is traditional in banking, good customers, bad customers, high volume, low volume. Yes, there's some low volume. That doesn't mean that I'm not going to sell to them. I'm just going to find a low-cost way to cater to them. And that means prepaid, and that means platforms that don't cost me a lot. So if we are able to use those sort of platforms so that we get away from this notion of low usage customer equals money losing customer for me, then this is going to work. So I'm very optimistic about the role the mobile operators can play. I would like to see a world where mobile operators find ways to cooperate with banks so that there's banking regulation and supervision involved in a way that you're splitting the responsibilities. The operator is working on the low-cost transactional platforms that makes this happen, works with the retail distribution channels just like they do today, and the banks are ensuring the safety and soundness of the stored value and are working with the regulators to ensure that trust and governance is there. So I'm very optimistic about the drive of the mobile operators, and my main question at this point in time is, to what extent will banks actually hesitate to jump on board and then find the mobile operators taking the business? I would like to see banks involved not only because of the safety and soundness aspect, but because the biggest interest that we have at CGAP is to see financial services emerge out of this payment platform. If you just have the mobile operators driving this, it's going to be fundamentally a payments platform. As I said before, I'm very happy about that. That fulfills very basic needs of people, social as well as commercial relationships. But if we have banks involved who see the main opportunity for them is not only make some transactional revenue, but offering alternative services, grow the customer with them, that is a world where we're going to be very happy. And I think at that point, we will be able to say this has an impact in terms of banking people, not just in terms of making life easier, which is what the payments proposition would be. So how can banks use branches banking channels to develop their credit portfolios? Credit today is the product that is drawing people into the banking services. So we should not neglect that aspect. And here I think there's perhaps a little bit of a paradox that banks need to understand very carefully. Branches banking, in some ways, feels like I can go to a certain geography without having to be there. It's putting distance between you and customers. That is not going to work if you're wanting to promote credit through that channel. So the term that I always use, the branches banking, is about unbundling the branch. It's not about eliminating the branch. It's unbundling the branch in the sense that you're taking the messy bits out of the branch, which is the cash handling, collecting payments. But that doesn't mean that you can afford to sit in your armchair in the Capitol and expect things to happen on the credit side. You need to go there and do the screening of customers, do the marketing of the products, and also do the collections when things go wrong. Don't expect the store owner who owns the grocery store to go after the bad debtors on your behalf. He's not going to do that. That's not good business sense for him. So what branches banking offers is the opportunity of you really streamlining your presence in the local community, but it's definitely not about eliminating that. If you just have agents and no retail and marketing presence of your own, then you're bound to be stuck in the payments world. So that's why I see this as an unbundling. You still need a presence there, and whether it's a small store on Main Street or an outbound sales force because you have two business development people knocking doors and going around, that depends on what segments you're after. But you should not see branches banking as a way of doing banking at a distance.